Hello traders, Gary Wagner here, just before 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is September the 16th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to give you an overall sense or feel for scope of activity this week, as well as our outlook and forecast for next week. Metals continue under pressure. Dollar extremely strong today. We'll take a look at the Kitco Gold Index as we pull up our first couple of charts. But we do have gold trading lower on the day, off about $5. We're looking at COMEX gold at $1312.90. It's traded to a high of $1321.50 and a low on the day of $1309. And it is that low that is very important. In terms of spot, 1309 and change, with a low of 1306 today and a high of 1318. Net change has been down about 0.33%. When we look at silver, silver is that kind of metal that tends to outperform the other precious metals on the way up in terms of percentage gains, but it also acts in the same way on the way down, having percentage drawdowns that are much greater than gold, platinum, or palladium. Off about 1% today at 1886. Again, this is COMEX. That puts it off about 18 cents on the day. Then there, of course, is spot at 1879. Low today is 1867 with a high of 1902. Traders, as we close out this week, there is no doubt, and that is that gold prices are absolutely at a defined and critical area that they need to hold if there's going to be any kind of a return to the bullish scenario that we have seen most prevalent in the market over this last year. Consider this. At the beginning of this year, at the end of last year, we had gold trading at $10.50 per ounce. It is trading over $1,300, and that is quite a substantial move in the market. It's still a tremendous gain. And when we look at our current activity, we have these series of lows that came in towards the end of July. We then have end of August right in here, equal lows. Actually, we made a low a little bit below that. These lows here were at about 1309. This low here at about 1305. But as you can see, the current low that we have had today, which comes in at 1309, is right at this critical pivot point. So on a technical basis, we have a couple of reasons to really look at this as a critical level of support. The first thing is that when we look at historical data, we can absolutely see series of lows that came in which this price point was very much a supportive price point for gold prices. Now, we're currently once again back at this point. Will it be supportive again? My sense is that gold will hold above $1,300 per ounce. I would expect it to be a little bit soft going into next week, but there is absolutely no doubt in my mind that there will not be an interest rate hike announced at this month's FOMC meeting. That being said, if that is how the conclusion of the FOMC meeting unfolds, I would expect gold, along with the other precious metals, to spike and see the US dollar go and succumb to some pressure. I think that it is important that we put this most recent decline in precious metals prices in context of where we've been and, more importantly, where I think we're going. Absolutely, we've seen a pretty tremendous decline as this market has come down from about 1355 to really once again go and flirt with 1300. As I said, 1309, 1306, those are our intraday lows today. However, when we look at the much bigger picture, and to do that, we pulled up a chart. It's a daily chart, but it starts the beginning of this year, in which we had the market tracking roughly at 1050. It has a incredible rally from 1050 to 1260. Now, this is Japanese average, so the prices are a little bit different. But you're looking at a major rally in the market, a 200-point rally. At that point, I think we had this irregular correction. What irregular means is that the top of B, the high in B, was above what we're labeling as a wave 1. I believe that concluded a minor 2. That took us into a third wave. This third wave is absolutely a difficult read. We had the first part of that third wave, so we had 1 out of 3, and then really, we've been really caught up in this corrective period in which we have oscillated at these lows. I thought we had probably concluded this correction, but that's not the case, obviously. As the market went up, I thought that was a good sign. Now, of course, last week, we did take a long position in the market. We got out with a small profit, but even that small profit was approximately a 10% gain, which is not too shabby for a 2-week exposure in the market. We have been flat throughout this entire week, awaiting some sort of confirmation that some sort of tentative bottom has been reached. No technical confirmation has unfolded in any way, shape, or form. We will want to see how this market opens up next week. And as I said, I would expect it to trade, could even test this 1300 one more time. But I think that following announcements made by the Fed at the conclusion of this month's FOMC meeting, and if in fact the announcement is that they're going to remain steady, remain the course, in other words, no hike in interest rate, I would expect all of the premium, which has eroded out of gold and silver prices, to move back into the market and do that rather quickly. Lastly, I do want to point out incredible dollar strength and the kind of effect that it had today in gold prices. Settlement in terms of spot down about $4 on the day, $3.80. Take a look at this dollar. It basically, that 0.8% really amounted to an $11 loss per ounce in the price of gold. Now, normal trading, even with the market being down, normal trading was up today, bidding it up about $7.50. Combine those together, and that is where we're getting this net change of off $4. In terms of major support and major resistance, the way that I look at it is we still have our major resistance just up at around 1370, these recent highs here, and support is right at around 1305. Traders, when we look at activity in U.S. equities this week, it's quite apparent that we have a mixed message, a mixed bag, in which there is no decisive direction in the market, rather alternating huge moves that we've seen almost on a daily basis. Incredible moves, triple-digit moves. In fact, over the last, say, 6 trading days, roughly 2/3 of those days, in other words, 4 out of the 6 last trading days, have been triple-digit moves. Today, we're looking at almost triple-digit moves, with the Dow Jones Industrial Average closing off about 90 points on the day at 18,123. Net change off about 0.5%. Standard & Poor's also trading lower, off about 0.25%, down 5.25 points at 2132. And the stellar performer in really the last couple of weeks has been the NASDAQ. We have had U.S. equities really having a superlative show when we look at the technology sector, of course, which NASDAQ is heavily weighted on. That actually closing fractionally higher to unchanged, up 1.75 points at 48.15. Absolutely no doubt, a stellar day for the U.S. dollar finishing much stronger this week. In fact, on many of the occasions we've seen gold under pressure, the strong U.S. dollar was a strong component of that. Today, we're up about 0.8%. When you look at a daily chart, we're at 96.04. When you look at a daily chart, you can see this tremendous upside spike that is absolutely prevalent in the market. We really don't have any resistance till about 96.25 on the dollar index. So absolutely no doubt, with the FOMC meeting scheduled to begin September 21st next week, there is absolutely a lot of uncertainty in the market. We have seen U.S. equities really oscillate back and forth, but oscillate with tremendous moves. We have seen the precious metals, in essence, under strong pressure throughout the week, and we have had gold closing near the recent lows at about 1305, intraday low 1306. That, of course, basis spot, COMEX 1310. The key right now is that we need to see the market hold that critical 1305, 1300 to 1305 level. My sense is we could see a little bit of continued weakness as we go into the beginning of the week, but I personally cannot see any kind of an interest rate hike being announced at this month's FOMC meeting. My sense is following that meeting and the announcement as to whether or not they will raise or hike interest rates. If in fact they do not, we should see gold spike higher. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another daily update and review. Bye-bye.